Hey, welcome. Today, we're going to forget the spreadsheets and the corporate jargon for a minute. Instead, we're going to head out to a bustling yam farm to unravel the basics of accounting. Trust me, it's the easiest way to understand how money really works. So let's get into it. Okay, just imagine this for a second. You've just pulled in a huge harvest, 1,000 yams. Now, some are for selling, some you need to store, maybe you'll trade a few. How on earth do you keep track of all that without losing your mind or, worse, losing your yums? This simple problem, right here, is the key to understanding everything about accounting. So here's our plan. We're going to start with the farmer's big problem. Then we'll learn the golden rule for tracking anything. After that, we'll get the farm organized, count everything up, and finally, see how all this stuff applies way beyond the farm. To solve our farmer's dilemma, we don't need some fancy, expensive software. Nope. We just need one simple but really powerful tool. So let me introduce you to the T account. It's about to become your absolute best friend for bringing a little order to all this chaos. And you know what? It really is this simple. A ledger account is just a T shape you draw on a piece of paper. It's designed to do one single thing perfectly. Track what comes in and what goes out for just one category. So you'll have one T for your yams and another one for your cash. That's pretty much it. All right, let's get to the most important concept in this whole explainer. On our farm, we've got one rule that you can never, ever break. It's the golden rule of yams. Every single thing that happens has two parts. A yam can't just vanish into thin air. It has to go somewhere. And this shows you exactly what I'm talking about. The two sides of the story. The left side, which we call debit, is for everything that comes in. So think of 100 yams arriving in the barn. The right side, credit, is for everything that goes out. That's like 50 yams going out of the barn to get sold. Simple, right? In and out. Debit and credit. Now, a real farm is a lot more than just a pile of yams, isn't it? You've got money coming in, costs going out, you're making sales, so you can't just have one T account for everything. You need a few different baskets, so to speak, to keep it all nice and organized. So we're going to set up a few key accounts. One for the yams sitting in the barn. We call that an asset, something valuable we own. Another for our cash, also an asset. Then one to track our sales from the market. That's our income, the money we're earning. And of course, one for stuff we have to buy, like fertilizer. That's an expense. Each one gets its very own T account. Okay, fast forward. The month is over. We've had yams coming in. We've had cash going out. It's a mess. It's time for what I like to call the great yam count. This is where we figure out exactly where we stand by balancing our accounts. Let's just focus on our cash account for a sec. On the left, that debit side, you can see all the money that came in from selling our yams. And over on the right, the credit side, that's all the money that went out for things like fertilizer and getting to the market. And as you can plainly see, those two sides definitely don't match. So just take a quick look. Which column looks bigger to you? Which one feels heavier? Is it the debit side, where all the money came in? Or the credit side, where money went out? Yeah, it's pretty obvious. The inside is way bigger. So how do we get them to match? It's actually a really simple three-step trick. First, just add up both columns. Easy enough. Second, find the difference between those two totals. And third, and this is the magic part, you just add that difference to whichever side is smaller. That's what makes them equal. And there it is. Look at that. We've added the difference, which we call the balance carried down, over to the credit side. And now, look, both columns have the exact same total. They're perfectly balanced. And that little number tells us exactly how much cash we have left. Okay, balancing one account is great and all, but how do we know our entire farm's bookkeeping is correct? Well, it's time to check the whole harvest. this is where we put together something called a trial balance. The trial balance is basically our ultimate fact check. It's just a big summary list of all our different accounts and their final balances. And this, my friends, is where the magic happens. If we've done our job right and followed that golden rule for every transaction, the grand total of all the debit balances it must perfectly equal the grand total of all the credit balances. There are no exceptions. Okay, so first we grab the final balance from our cash account. After all that math, we figured out we had 50,000 naira left over. That's a debit balance. Next up, we look at our yam barn. We've calculated the value of all the yams we still have in storage, and it comes to 120,000 naira. That's another debit balance because it's something we own. And finally, our market sales account. The total value of all the yams we sold was 170,000 naira. Now, this is an income account. It's the source of our assets. So its final balance ends up being a credit. And now, the moment of truth. We list all our final balances in 2 columns, debit and credit. We add up the cash and the yam barn on the debit side, and we compare it to the sales total on the credit side. And would you look at that? 170,000 on both sides. They match perfectly. It means our books are balanced and our farm is in good shape. So look, we've had a bit of fun on the farm, but why does any of this actually matter if you're not a yam farmer? How does this apply to your actual life? Well, this skill is literally everywhere. Whether you're trying to run a small shop or just trying to manage your own family budget, or maybe you're trying to figure out if a huge company is healthy by reading its annual report. It's all the same logic. This is the language of money. And when you understand it, you're empowered to make way smarter financial decisions in every single part of your life. At the end of the day, it really all comes down to this. The goal isn't just to be a bean counter or a yam counter. It's about really understanding what you have so you can make it work for you. It's all about making your yams or your money count. So I will just leave you with this one thought. Every single time money moves in or out of your life, it's telling a story with 2 sides, a debit and a credit. So maybe take a look at your own finances. What kind of story is your money telling you?